Welcome back to my channel. If you're not subscribed, please do subscribe. And if you're a returning subscriber, you're most definitely welcome. So today I'm going to be teaching us how to identify the right order blocks to use. I'm going to be giving us some tips. Hope my students don't come for me, but I'm going to try as much as possible. So even anyone that is already knowledgeable on trading the forex markets, if you use these tips, it's going to enhance your trading goods, and you're going to have less losses than before. So I'm going to be exposing some of my secrets and other things I use as a day trader. So I've written down some points. I have like 5 points I'm going to be giving us on how to use other blocks, and also how to identify the right kinds of other blocks to use. So first of all, this I've marked my charts here. So first of all, number one other block I'm going to be teaching us how to use is other block inside another other block. So for example, I have the structure right here. This might not be a break of market structure to you, but for me it's a break of market structure, because if I go to other time frames, it's going to be a break of market structure, or probably a liquidity grab. So either one, depending on the model that you trade, you can use this to also identify the right kind of order blocks to use. Here I have it. So in this particular time frame, it's a break of market structure. Then we have this consolidation. So we all know as ICT traders, after consolidation is expansion, and because of its ranging itself inside this other block, this also is an other block. From this range high to this range low, it's an this range high to this range low is also an order block. So for price to take it out, I'll be expecting something inside this particular range. So when price came down, price violently came down to this zone, so it was just consolidating, constantly. When we go to lower time frame on this particular zone here, we'll find out that this we have a an internal break of market structure on this particular zone. Okay, so one way to identify it is when price begins to consolidate inside that particular zone, we will be expecting an expansion as far as it's inside the particular range we are looking to take the trade off from. So that is for other block inside an other block, and for other block inside a consolidation. So the other type of other block I use is the other block that breaks market structure. So most of the time it doesn't give a break of market structure, just depending on the kind of trade setup that we have. Most times we have the consolidation before the expansion, while most times we'll be looking to see a break of market structure before a particular move. So for my own analysis on this GU, this was my break of market structure that I had here, even though it was not really clear, and I had no strong move to the upside. But because of I was already looking for price to take buys after I did my multi-time frame analysis, so I was expecting something like that inside this particular range. So after price gave me this break of market structure, even though it didn't have so much momentum to the upside, I was expecting price to actually buy. So the other type of order block I use are the order blocks that gives me a high risk to reward. Now, for the kind of trader that I am, I like to take trade very cheaply. That's if I'm buying, and if I'm selling, I like to buy very expensive. I like to sell very expensive. So in this scenario, when price got down to this zone, I didn't have much to lose, because I was already looking to buy inside my order block in discount. So even though so even when I was looking to buy, my stop loss on this trade was not even more than 20 to 23 pips. That was the actual stop loss I had in mind when I was looking to take this trade. So because I know that most most once most other block that gives me high that are very high efficient, I I normally get them at very cheap rates. So if I manage to get another block very cheap, and I look that my risk to reward is going to be very and it's going to give me something out of it, I will actually take that trade. But once I measure my risk to reward, and I find out that the trade will not give me much, and that trade is too expensive, that order block is not likely to work for me. Now, these are things that work for me, it may not work for you, but from experience and my time being a trader, especially being an intraday trader, this is what I have come to notice. So any other block that doesn't give me a high risk to reward, that other block is not high, would I say, is not high probability for me. So once I saw my break on market structure and I already had other confluences that was making me to look to take buys off of this zone, I the other thing I looked at was my risk to reward. So I just looked at it that, okay, if I'm taking my buys at this particular zone and my stop loss was about 23 pips on this particular trade, so I'll be looking to take my first profits at this. I'll be looking to take my first profits at my first range high, which was like 57 pips. So that was like 1 to 2. So um um if I was to set my stop loss to break even and take partials and still wait for the trade to continue to play out, I'll be looking to take my second takeout from this particular zone. So that would have been like 1 to 5 or 1 to, okay, that would be like 1 to 7 risk to reward. So these are the other things that I look when I'm trying to take trades if I am using an order block, because it is not all the time that you find trade setup using order blocks alone, unless if you're already an experienced trader. So most of the times we see clean entries using order blocks only, but it's not all the time. So it's not all the time. Like, let me just say, like in a week that you can get an entry like this like 2 to 3 times, depending on the kind of trader you are, whether you're a swing trader or an intraday trader or a scalper. So this just depends on the kind of trader that you are. So the other kind of order block that I use are order block that takes out, that stops raid, or would I say stop raid, or turtle soup. So I will not take more, I will not talk much more on this, because I want us to go and do our own research. So this will be our assignment: go do your own research on turtle soup and stop raids. So the other kind of order block I use are order blocks that gives me that takes out liquidity, or gives me the turtle soup setup. So if I see trades like this, I am very, very much likely to take that trade, because I know that the market makers are in play in that particular trade setup, hence the liquidity purge or the turtle soup entry. So same thing for this particular trade on here, because after price consolidated and gave us expansion, even while the previous trend has been bearish, because I knew that 2 weeks ago I've been looking to take sales only until this happened at around until I had this setup um around on 25th of May, Thursday. So I was already looking for a very, very clean setup to take off of this particular zone once price returns back to this area. So even when once price has been very bearish previously, so while we had the consolidation and the expansion, now I now had another break of market structure that was clean enough for me to want to take buys out of this zone. So this other block also was inside my consolidation. This is the other block I'm talking about right now. This other block now was inside this consolidation, hence making it a very, very high probability order block for me and for the kind of trader that I am. So once price turned down to this particular order block inside my consolidation, I was looking to take buys as well. So most times we are not lucky to get this kind of massive move, but it just happened that on this particular day the market was very, very volatile, and once price hit this other block, because the market makers are already in on this trade, so we had this massive move to the upside. Now when you're very good at identifying POIs are your ICT reference point, or your ICT area of interest. POI mean point of interest, or might say area of interest or point of interest. So once you're very good at identifying these POIs or AOIs as well, you will have a very, very good risk to reward. Just like this trade happened right here. Once I had my order block inside the consolidation and I was already looking to take buys over here, you can see that once price returned inside this particular zone. So if you even though you're looking to take your buys inside this order block, depending on the time frame that you're trading, you'll find out that your stop loss should not be even more than 20 to 21 pips, 20 to 21 pips, or 22 pips rather. So those are the other things that I look at when I'm looking at other blocks. Other my risk to reward has to be very, very, very good for me to want to take that trade. If it's not giving me a very clean risk to reward or a reasonable risk to reward, I won't want to take it, because that is one of my rules to taking using other blocks to take the trade. So guys, that's all. I've actually exposed a lot of things that I do and a lot of things I use, especially when it comes to using other blocks to take trades, to base off my trade entries. So it is not all the time I use other blocks to take off my trade entries, because most times it can be very, very risky. And if you're not good with it, you're actually going to lose money. So guys, I believe that we learned 18 of 2 from this video. If you'd like to sign up for my mentorship, you can hit me I'm going to leave my contact links in the description box below, so you can hit me up and also subscribe to the channel, because I'll also going to be uploading more educational content on this channel for you to learn more from. Thank you guys for watching, and I'll see you guys in the next one. Bye.